What mistakes did you make when you first started investing? Dumped a ton of money into a stock in one big lump sum when I first started investing around mid-2021, and I am down around 10k on it now. This stock may or may not be a well-known meme stock that I'm not as confident in any longer. I know it's probably up to me to do research and make a final decision on whether I keep holding or sell some all of it, but I just don't want to succumb to the sunk cost fallacy. If I sold it, I'd use the money for my Roth IRA. I'm only 21, so I am still young, inexperienced, and am just wondering if anyone else has ever been in a similar situation. Realized I started too late. I bought soybean futures on the advice of my futures broker at the time. He called me up, suckered me into the position, I bought. Promptly lost all my money in 3 days. Fuck that guy. This was probably 30 years ago. Thinking I could outsmart and outwork others with all my fundamental and technical analysis and options trading and beat the market. I was so wrong. Just stick to total market index funds, sleep easy at night, and enjoy your extra free time. Wish I had done that and invested more earlier. Biotech will burn you every time. I'm in the medical field. I did my due diligence. I followed the company for many years through final FDA approval. Excellent science and scientific results. But very hard to change physician practice patterns. I went all in and it is down 90. We'll keep it for tax loss harvesting. Edit and a reminder to stick with index funds like FTSE. A friend told me they found the perfect stock that would skyrocket in the next year when they pass their medical trials. It did not. I still hold on to it at 98 as a reminder to do my own research. Having tunnel vision blinders and not looking at the marking in a long-term view. Investing in individual stocks. You have 30 years before retirement. Biggest mistake I made was listening to all the common advice you see on Reddit. It's mostly all wrong. Just go buy some of the classic investing books and just watch Warren Buffett interviews for a year. That will fix you right up. Not buying real estate 8 years ago. My Roth IRA was 100 bonds for the first 8 years. I bought pre-IPO shares at my startup to save on taxes. Don't do that. I invested in foreign large value funds, don't do that either. I visited our Wall Street bets. Options. Nuff said. Open positions in 3 companies based of articles written by analysts. Moved out of 2 for the small tax loss, but still holding the 3rd. It's a micro cap that's down about 70 for me. It's a steady reminder to do my own research, a test of a long-term hold which I've got a shaky thesis on, and a learning tool. I read their annual reports and listen to the earnings calls wrapped all into one for a couple $100. Don't do this. Buy one at 50, sell it at 70 in couple of days or weeks, rebuy at 60, sell it at 75, rebuy at 65, sell it at 85. You think you are making money, but you could have held for a year and pay less on the tax. I bought $20,000 of People at one time at $103. I thought I was getting it at the bottom and it was going back to $300. It went up to $127 and it's now hovers around $65. Looking back, I should have done DCA over a year. Big lesson there. Giving up on good companies too soon. I bought a lot of Apple stock back in 2017, it took a big hit and I sold. Had I just kept buying more, I'd be very happy with the returns. So many. 1. Trading on margin. 2. Sold naked puts without having an exit plan. 3. Chasing yields. 4. Not DCAing earlier. 5. Investing in stocks. I believed that the market or an equity or a fund only went up or down, nothing else, and thus, when something had gone down for a while, then leveled out, that it had to go back up. That was the only option. You know what? It's not true. Markets or stocks or funds can go sideways. Meaning go nowhere. For surprisingly long periods of time. Penny stocks. trying to catch lightning in a bottle. But it was low risk high reward. Resulted in no reward. I believed I was good and not lucky when I was winning. If you're holding a stock an average person has never heard of with an insane run-up and valuation, just take your winnings. Or at least your cost basis off the table. Now I tried to keep 60-80 in ETFs to counteract my biases. If I'm picking a stock, it's now something with a moat and something I think can compound reliably faster than the SP, not looking for home runs, just looking for winners. Not using proper asset allocation and not having a trailing stop on trading positions. I use a 4 allocation and a 25 trailing stop. I have made every mistake in the book. Hopefully so you don't have to. Don't buy individual stocks. Buy boring index funds. Also, play the long game. If you buy the SP 500 and hold, you'll have ups and downs, but you'll end up in the green. Don't panic if it goes down. In fact, buy and don't even look at it. Investing money in individual small caps. Sigh. Bought low PE just because they were cheap. 1. Investing in pointless, sideways equities. 2. Not understanding my goals and rules. 3. Investing in Canadian equities. I'm Canadian. Thought I was gonna make my gold doing day trades. Then swing trades. Then selling. Got into biotech based on rumors and can't remember a single win on those. I assumed quick success implied I knew what I was doing. I started to try to pick big winners. I held on too long when they were failing and I didn't properly ensure retaining my gains on those where there had been some success. There is a ton that you need to know to be steadily successful. If it were easy we would all be millionaires. Investing in a bunch of market segment funds like energy and healthcare that either should do well. Simple total stock market index was the right answer. Buying a penny stock in 2021. Finally realized the loss this year to take advantage of the tax loss harvesting benefit. Pretending I knew more than I really do and, for a brief time, sometimes believing the experts who claim they do. Trusting my judgment on companies. Almost all of my favorites went way up while I traded in and out and missed some monster moves. Just stay invested. I did the same in 2021 with a weed stock. Lesson learned, but I'll take my Tilray shares to the grave with me before I sell. Thinking that I could beat the market instead of just putting my money in VU. Spent too much time trying to diversify by buying different ETFs. Finally realized ETFs are already diversified and that I had too much overlap. Only need a few different ones. Actively trading is a big mistake people make. Just invest in funds or ETFs with low fees. Technical analysis is entirely backward-looking. Noise is not a pattern. Market news pundits will ascribe cause to an effect only after it's happened, more backward-looking. I don't have the time to do proper value analysis. After wasting 2 decades I settled on the SP 500, always buy, never sell. I focus on my day job and max out my retirement contributions. Listening to YouTubers and Cathie Wood for stock ideas. None. In 2015 my first 3 stocks were Apple, Nvidia, and Tesla. I seem to have gotten worse with time. Lol. ARKK was my worst loss. I eventually cut my losses and put the money in QQQ. Pay attention to taxes. Options. Checked out WSB. Not setting trailing stop losses. I started doing it over the past months and the overall swings have been much more stable since. I always sold too early. Tesla way too early, Nvidia 1 month before the massive rally. AMD same. Well now I just stick to index funds. Cause I can't time the market. I invested in stocks other than index funds, but my biggest regret was investing too heavily into the marijuana industry, not fully grasping how the industry is regulated. Buy stock at 20, ride to 115. I'll hop off at 200 I say. Stock goes back to 15. Neutral face,